Alright, what's up, Quantum? Welcome to the chat. Alright, gang, let's get started. I am not a financial advisor, and this podcast is for informational and educational purposes only. The content discussed here is not intended as financial, investment, tax, or legal advice. Always consult with a qualified professional before making any financial decisions. Past performance is not indicative of future results. All opinions expressed are my own. Let's go! Aloha and welcome back to the week that was. I am your host, Colin Edsman, and another crazy week in the market. Honestly, it's just the baseline at this point. If this is the first time you're here, mahalo for pulling up a chair. If you're a regular, you already know the drill. We don't do hype. We don't do hopium. We just tell you straight what happened this week, why it matters, and what it means for your money and your life. Drop in the chat where you're hitting me up from. I'll see you I see a lot of people from all over the place, so please, thank you for joining me. And listen, this week is definitely earned its name. We had the Dow punch through 53,000 for the first time ever on Monday, and by Tuesday afternoon, Wall Street was in full chip stock panic. Over $1 trillion erased in semiconductors in 48 hours. Then Thursday and Friday, AI money came roaring right back. Whiplash of a week. That's exactly the kind of week where people who reacted emotionally definitely lost money, and the people who had a plan made money. We're going to break down exactly why. Now, let me just take a deep breath for a second. Gather our thoughts. There were so many great, amazing things that happened this week outside of the markets as well. So I hope you are doing incredible wherever you are, whenever you are. Quick local note, please, if you're in the area on the island, please stay safe. Waikoloa Village is currently being evacuated as far as I'm getting news from. There is a brush fire happening in Waikoloa Village. I'm not sure on if it's contained or not, but there were evacuations and road closures already. So please be safe as always. Turn around, don't burn. All right, so here's the lineup. We got top 3 stories that actually moved the markets and mattered for this week. We got the market movers, who won, who got hammered, and why. We're going to go into a deeper angle, what's really going on underneath the noise. And we're also going to talk about the agentic Kairos portfolio that is trading currently live on its own, and it's been going for exactly 4 weeks today. Today is the anniversary of an agentic portfolio and me going fully agentic there. We're also going to see what kind of opportunities are going to be coming in next week. And at the close, we're going to talk a little bit about, as you can see behind me, I got something different going on. We're going to talk a little bit about the impact that Robinhood Chain is making. If you don't know, Robinhood unveiled their own chain, blockchain this week. It's competing with blockchains like Solana. I know at least the Twitter war has already started between Solana themselves and Vlad Tenev from Robinhood. So it's been just delicious drama. It's like Love Island, but in finance. It's incredible stuff. So please grab your water, tea, coffee, or a Mai Tai if you're, in the area. Let's get into it. So, the first story, we got chip stock roller coaster. Okay, this one is a bit of a big one. Semiconductors. Monday, everything is roses. Alphabet, Meta, Apple, Tesla, all rallying. Semis rallying. Dow Jones, like I said, breaks through 53,000 for the first time in history. NASDAQ over 1%. Everybody's feeling great. Now, Tuesday comes along, total reversal. Samsung dropped earnings that missed the market's sky high AI demand expectations. And as we know, expectations are what? Everything. And get this, Samsung's profit actually beat Nvidia and Apple. And the stock still dropped 8% because Wall Street just wanted more. That tells you everything about where where the sentiment was sitting. On top of that, there were reports that SK Hynix, one of the key suppliers of high bandwidth memory chips that go into NVIDIA's AI processors, might be slowing down HBM production expansion to make more of the cheaper commodity memory chips instead. That's a supply chain red flag for the entire AI build out story. Add in a report that DeepSeek is working on its own AI chip cut reliance on Nvidia and Samsung, and you had the perfect cocktail for a sell-off. Kind of like that Mai Tai. Here's the number. Over $1 trillion in semiconductor market cap wiped out in that stretch. SMH, the VanEck semiconductor ETF, fell more than 3%. Micron down 5%. Intel got absolutely demolished, down over 20%. Now that one hurt on a personal level. On the week, AI spending, sustainability fears, NASDAQ, of course tech, fell over 1% in that day alone. This is what the market is asking, though. It's very simple. But it's a very uncomfortable question. Are we actually going to return or make any money on all this AI infrastructure spending, or are we building a very expensive, very shiny bubble? Nobody knows yet. That uncertainty is going to keep whipsawing this sector until we get more clarity from earnings season. But here's the twist. Thursday and Friday, the AI trade came in roaring back. Meta jumped nearly 5% Thursday on the news that they're starting to manufacture their own customized AI chip in September. It was such big news, Mark Zuckerberg actually came onto X to post it. Now, we all know that if you want news to move, you got to post it on X. And even the founder of Facebook knows that. But from September, they're reducing their dependence on NVIDIA. Micron popped over 4%. NVIDIA added another 4% on the week. Meta finished the week up over 15%. It's the best week they've had since early 2024. And then Friday, the cherry popped and SK Hynix American's depository shares debuted on NASDAQ, priced in at $149 and opened 14% above that. Raised $26.5 billion in that offering. U.S. investors could not get enough of a piece of South Korea's number 2 most valuable company. Here's a quick takeaway. The AI trade isn't dead. It's not a straight line up either. If you're holding chip names, this is the environment. Sharp double-digit swings on single headlines. Position size accordingly. And don't let one bad Tuesday shake you out of the thesis. That's still completely intact, at least by Friday. Like, we know this is new, this is shaky, everybody's got it. People like shoe companies are slapping AI on their things, right? So it's going to be a volatile market, as you can see. Don't be panic selling for nonsense. Like, you have to remember where this is going. Like, your money isn't for Friday. Your money's for like 1,000 Fridays from now, right? So keep that in mind. Any of you guys panic sell on Tuesday? Anybody buy the dip after that? If you got it, be honest. Throw it in the chat. Let's see how the markets affected you guys this week. I know I've got some very sophisticated traders who follow this podcast, so I don't expect any of you to have panic sold. Yes, Meta definitely pumped. Thank you, Quantum Queso Dip, for reiterating that. Oh, what an incredible week. All right, so for our next story, the Fed is kind of eating itself alive. The FOMC minutes dropped Wednesday into Thursday from that June meeting, and they confirmed what a lot of us suspected. This Fed is deeply divided. It's like a divorced household where they still got to kind of live together and get along for the kids. It's not pretty. The committee held rates steady at about 3.5% to 3.75% unanimously back in June. But the minutes show that the committee was split 9 to 8 on whether they should have hiked. 9 to 8. That's not consensus. That's a family fight. And CNBC actually called it exactly that. The minutes also showed the Fed scrubbed out language that suggested an easing bias, meaning any hope of a rate cut soon just got pushed, I don't know, somewhat further out. Here, Quantum Queso Dip says, I panic sold covered calls on Meta today. Oh! I'm sorry, mate. Who would have known, though, right? You follow a strategy, you followed your system, and sometimes that system just doesn't pay off because, well, shoot, things pop in the news. We didn't know that Meta was going to have the best day it's had in 3 or 4 years. But yeah, I completely agree with you on the hawkish stance, Quantum. Kaká for sure. Oh my gosh. Yes, until proven otherwise, because we don't know. He's still kind of dipping his toes in how this works. But why the hawkishness? Inflation forecasts for 2026 and 2027 got revised higher, and the minutes specifically called out the Middle East war and the effects of the AI build out itself. AI is becoming, well, inflationary. We'll get into that. All that infrastructure spending, like I said, causes some inflationary pressures. They also flag the closure and reopening of the Strait of Hormuz and tariff effects as reasons inflation is expected to stay elevated near term before cooling. And of course, we got another, I hate you, Iran. I love you. Let's make a deal, Iran. I mean, I thought we were done with this. Apparently not. Like, I'm getting really good at saying Strait of Hormuz at this point. If you've been following this podcast since the beginning of this war, I couldn't pronounce that worth a lick. Now I got to figure out how to make sure I keep saying Warsh, not Walsh. But, as far as takeaways go, don't fight this Fed. They are telling you directly they're worried about inflation sickness and they've got real reasons. Energy, tariffs, geopolitics, rate sensitive trades need patience here, not conviction that a cut is right around the corner. Because we don't know what's happening. This is a new Fed, right? So we got to give Big Daddy Warsh his time in the ring, per se. Sidebar, money's on Max Holloway for the fight tomorrow. I know Connor is Connor, but even the prediction market's got it up at 65%. But Max is hungry. Connor has been kind of Hollywooding this for a while, but I'm not going to talk about the fights anymore. That's not this podcast. Now, let's get into our next story. A jobs report that lies if you only read the headline is kind of what we're going to be talking about here. So this one's important because the headline number and the real story are two different things. June job reports, the U.S. economy added just 57,000 jobs. That's way below the 115,000 jobs economists expected, like we covered last week. And it's the slowest month of hiring since February, which, remember, was actually negative. On top of that, April and May got revised down by a combined 74,000 jobs. So the labor market has been quietly weaker than reported for months and months now. Here's the part that should catch your attention, though. The unemployment rate actually fell 4.2%. That sounds good, right? But for the wrong reason. It fell because the labor force participation rate dropped to 61.5%, the lowest since March 2021. And if you were around back then, which you probably were, you know what that March we were dealing with at that point. People aren't finding jobs, so they're leaving the workforce entirely and not getting counted as unemployed. That's not strength. That's the labor market hollowing out from underneath and a headline number that looks fine on the surface. Leisure and hospitality alone shed 61,000 jobs, wiping out almost all of May's gain in that sector. Healthcare and professional services carried out what growth there was. On the leisure and hospitality side, of course, obviously, I'm in Hawaii. So I have a pretty decent view of what tourism can and cannot look like. And from what I can see, tourism is majorly down. Some of the most busy hotels in the state are taking some pretty decent sized hits. Um, I expect it to be because of energy costs, flying, fuel prices have gone up and they've priced it up higher. So people are just traveling closer to their homes, most likely, right? So that's been pushing the local economy down, and they don't really have a response for that, which kind of worries me on a local standpoint. But as far as why this matters, you've got a Fed that's hawkish on inflation at the exact same time the labor market is cooling harder than the headlines actually suggest. That's not a comfortable combination. It's the setup for a much tougher policy call later on this year. Stocks at record highs, job markets softening underneath. Make sure you jot this down. That's kind of a recipe for a bad situation. Here's my takeaway though. Watch the labor force participation, not just the unemployment rate. Going forward, that's the number telling you the real story right now. And layered on top of all three of these stories, Iran fired on tankers near the Strait of Hormuz again this week. Oil spiked, Brent jumped over 3% intraday on the news before settling. 20% of the world's oil traffic runs through that strait. Let me repeat myself. 20% of the world's oil traffic runs through that strait. And everybody's looking at it right now. That's a live wire sitting right underneath everything else we just talked about. It's part of why the Fed is nervous about inflation, and it's a direct line to energy stocks, which we'll get into in just a second. Now, I hope you're keeping up with me. Let's check with Quantum Queso Dip here in the chat. He's saying job reports are lagging, a lagging indicator. Healthcare is a leader in new jobs. Yeah, I would say that's completely true, especially with the way the numbers are moving right now. We need healthcare, right? And healthcare has actually lagged behind what it usually does every year anyway. So it had some catch up time to do that anyway, because healthcare will always be around, but people were sort of reallocating their healthcare safety spending into hope spending, like AI spending. Now that they've gotten their profits, they're going to reallocate to the more safe defensive sectors. Yeah, like maybe energy, but most likely, yeah, healthcare. So I can see that moving forward. We'll see if my agents actually pick up that signal and move into healthcare moving on this week, because they were a little bit early. I'll get into that later on, but I think maybe 3 weeks ago the agents bought a 3x biotech in healthcare. So I think it was just a little bit early, not wrong. But let's get into the market movers. Let's run the board real fast. The indices for the week: Dow Jones first ever close about 53,000 on Monday, choppy rest of the week. S&P 500 closed Friday at 75.75, up over 1% on the week, closing in on record territory. Nasdaq closed Friday at 26,281, up on the week despite the midweek chip scare. Now, here are the winners for the week. Meta, of course, the story of the week, up nearly 15%, best week since early 2024 on custom AI chip manufacturing news. Now, I don't necessarily think that they're going to pull it off as fast as we want, but obviously the market for Meta loved it. Nvidia up about 4% on the week, defying the broader chip sell-off. Still the market's AI bellwether. Micron, volatile but closed up 4.5% Thursday alone. SK Hynix NASDAQ debut priced at $149, up about 14%. One of the biggest IPO stories of the year so far, 26.5 billion raised. Sector-wise, communications, services, financials, consumer discretionary, healthcare, all posted weekly, strong weekly gains. Now, here are the losers. Whew. Intel, my baby, down 20% on the week on AI CapEx sustainability fears. Now, I knew that was coming along. We've been talking about that for a few weeks now. The ugliest chart in tech this week, though. Samsung down 8% on the earnings miss, despite beating both Nvidia and Apple on profit. Sector-wise, real estate, like Opendoor, utilities, and energy all finished the week lower. Energy lagging, even with oil prices spiking on the Hormuz news, which tells you the market's more worried about demand destruction from a hawkish Fed than it is excited about a geopolitical risk premium. I think we already kind of got out of that season. Now, let's check what Quantum's saying here. Yep, consumer staples, yes, and Meta's problem is too much capex. They buy on the news and then dips. Yeah, he's right, and we saw that happen. Now, commodities. Oil, Brent crude jumped to $74 to $76 range intraday on the tanker attacks near Hormuz before getting back. WTI right behind it on the low 70s. Gold pulled back to around $4,070, 75 as rate cut hopes got pushed by the hawkish Fed minutes. Silver down 3% to 58.27 or $58.27 on the same repricing. Now, that was all the beautiful stuff for the week. Let's get into something a little bit more focused. I want to talk about Robinhood chain news. Now, it's not surprising that I'm a bit of a Robinhood maxi. Big fan, love all their products. I will touch and dabble and learn anything that comes out from Robinhood, and you know that. Now, I'm just noticing my camera is slightly crooked. My goodness, give me 1 second. That's just going to bother me now that I know it's there. Thank you. Okay. All right. Let's get back to it because I was just going to itch my brain the rest of the podcast. Now, I'm going to get back into Robinhood news. And yeah, I'm calling this out specifically because it's the platform this whole desk runs on. Hood stock jumped 14% this week. Part of it was a consumer confidence ticking up to 91.2 in June. But the bigger driver was Robinhood's London keynote, which I covered live last week. The world is flat. Now, that keynote title got me intrigued because, sorry to break it to you, the world is not flat. Don't be ridiculous, right? But it was still an intriguing keynote. But that keynote is where they laid out the full global roadmap for Robinhood Chain and their own. Robinhood Chain, if you don't know, is their own blockchain. Plus stock tokenization now live in over 120 countries. That new earn product offering up to 7%. And not everybody's gotten it yet. So if you've got it, congratulations. I personally moved some capital into it because who's not going to say yes to 7% on a stable coin? It's on Global Coin or USDG through DeFi lending via Morpho, pushing into perpetual futures. And this is the part that made me kind of really excited. Agentic AI trading, duh, right? Letting customers hand off the buy and sell decisions for stock options, like we've already been doing the last few weeks, but also crypto, right? So now I haven't gotten access to that portion yet, but I'm assuming I'm going to start, well, trading crypto, and why not? Also, Josh from Invest with May came out with an idea today. Why not be able to agentically trade predictions. So we tend to just ask, and Robinhood provides. Now, that sounds a little bit familiar, though, right? It's literally what we're doing every single week with the Kairos desk, right? Um, Robinhood's just now building the on ramp for general public to do it too. Like, this is what I want for everybody. I don't need everybody having the complicated 2 weeks straight at 5 hours a day trying to learn how to agent. Yeah, that works. You got it. But the being able to onboard the general public, Wall Street's taking it really seriously. Morgan Stanley raised their price target of Robinhood to $124 from previously $95. Barclays went to $122 from $82. Compass Point raised theirs too, all ahead of Robinhood's Q2 earnings coming out end of July, the 29th. Analysts are watching prediction market revenue as a potential breakout number. It's on pace to rival crypto trading as a revenue line. It's definitely worth a watch. I'm seeing some decoupling from the Bitcoin price action and the Robinhood price action, so that's actually great. I would like them to, well, be their own independent, well, entities, right? Because Robinhood is much more than just crypto now. Like, I'm a big fat Bitcoin maxi, but I don't need Bitcoin messing with my Robinhood shares every time it takes a dump. So net, a genuinely volatile week that still closed green across the board for major indices. Especially, well, Robinhood being up 14% on the day. So it's kind of a pretty healthy week. Overall market wise. It absorbed the real scare and came out the other side a bit higher. So that's not always how it goes if you've been doing this long enough. Now let's check the chat here for a sec. Quantum Queso Dip says hood breaking out was nice to see. Yes, definitely. I obviously really appreciated it. So a lot of those things kind of run on their own in uh, my margin portfolio where a lot of the major trading happens because, well, you need margin to do a lot of things. But I'm focusing on my agentic trading portfolio, so I was just happy to see a random pump, right? Because everything just kind of goes on its own. The less you stress, the less you hyper fidget with your positions, the more money you make. So let's quickly get into the deeper angle, but give me 1 second. I'm just going to take a drink. Ooh, ah. All right. Please do yourself a favor and get a drink as well if you need to. Hope that Mai Tai it's treating you guys well. So, whew, let's take it down a little bit because this is a section that really should hit you in the eardrum. Here's what I think is actually going on underneath all three of these headlines. We're in the middle of an AI capital expenditure arms race, and it's now big enough to move the entire US economy. Inflation forecast is now being based off it as well. Yes, like I said, the US inflation is being forecasted off of this capex expenditure. The Fed didn't just mention tariffs and the Middle East in its inflation outlook week. They specifically called out AI infrastructure build out as an inflationary force. That is a new sentence in the Fed's vocabulary. It tells you the size of what's happening. Hundreds of billions of dollars in chips, data centers, power infrastructure. That's not a sector story anymore. It's now a macro one. And at the same time, the spending boom is happening while the actual labor market outside of tech is sort of stalling out. Leisure and hospitality, broad based hiring, they're all cooling really fast. So you've got a two speed economy, an AI infrastructure sector running white hot, inflationary, minting new billionaires, and moving indices, and a Main Street labor market quietly losing momentum underneath it, with people dropping out of the workforce rather than finding new jobs. Now, some of those things, maybe those indicators don't always paint the best picture of the entire labor market. Like for me, I don't necessarily have a job. I'm unemployed, more or less, but because I trade equities, I'm not broke. But so where do you put us retail traders in? There are millions of us out there providing income for ourselves outside of employment. So how do you rate that number at all? All right, let's check the hat, make sure it's in good shape. Boop, 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 boop. All right, but that's the tension. The tension the Fed is stuck in. 9 to 8 on the committee isn't indecision for no reason. It's because they're genuinely staring at two different economies depending on which sector you look at. Hike to fight, AI and tariff driven inflation, and the risk breaking an already softening labor market. Cut to help labor, and you risk pouring gas on the inflation fire. That's not that's that's got real geopolitical kindling under it. Hormuz, tariffs, the whole shebang. If you only watch the S&P closing green on Friday, you miss all of this. The index doesn't tell you the story, and the story is contradicted AI wealth creation running on a completely different track. And the broader economy and the Fed, that has to somehow write one interest rate policy to fix both. That divergence is, well, I think the deafening tension of this market for the next 6 to 12 months. Keep it in your back pocket, or maybe keep it in your front breast pocket, somewhere close, every time you see a headline number that looks kind of calming. We need to keep this in mind. Now, for a little bit more of an interesting and more positive direction here, let's update you on the Kairos Securities AI trading desk that I created about 4 weeks ago. Happy anniversary to my agents. They made enough income to pay their salaries, which we know that I gave them. Now, this is a kind of an exciting topic for me because I think this is going to be something really big. Now, you know that you can customize these agentic portfolios to do any type of strategy you would like, especially if you're trading on Robinhood. It allows you to kind of plug it in and go. But it's not necessarily intuitive, so it takes some time. But we're going to pull back the curtain a bit on the desk. This is our live AI trading team, right? We got Kairos running all day, every day, at the right times. Real capital, and we're going to talk about the wins and the mistakes because that's very important in this kind of trading strategy. But I think this is something that's going to help people maybe one day, 10, 15, 20 years from now, not necessarily need jobs. Like this could be the way we help people maintain a baseline level of comfort, right? If this can pay for a couple of coffees, maybe one day it can pay your rent, right? It's just trading, well, autonomously without emotion. And that's the one big thing that ruins a lot of portfolios and traders, right? It's your stomach and your fear factor there. Now, the account is sitting up about 10% from, or 10.65% from last Friday's close. A solid week for the total account value, but stick with me here because the story underneath that number is more nuanced than up 10%, right? So trades closed this week. The desk closed out 5 positions between Monday and Thursday. The headline winner, and it's a big one, was the SPY calls that it had for 7:55, expiring July 24th. And the team had been riding a directional AI momentum play. So it closed on Monday for a 69.66% profit. That's the story of the week for the desk. On the loss side, a Taiwan semiconductor ticker EWT got stomped for obvious reasons, but the agentic desk saw it for different reasons. It stopped out on a Kijun cloud breach, down about 1.5%, as well as Southern Company was utility position or energy got closed out because the CIO or the Chief Investment Officer agent recommended closing that at that point for profit before the FOMC minutes came in. Now, it was a bit of there was also a put hedge on that position, so overall it came up with a small loss on that position. So, but small losses are manageable. Big losses are where problems come in, right? So the fact that it ended up closing for a total of down 2.4% was a very manageable trade. Now, net for the week, the realized gains were, let's say a couple $1,000, right? Let's keep it easy. Um, and there's some unrealized gains as well because it doesn't hold very many positions, somewhere about $100 in unrealized. But the big winner carrying the four small losers was obviously those SPY calls. But that's actually a healthy trade if your winners are sized correctly, right? And this week they were, luckily. The agentic traders know how to size these much better than I can at much closer to 4% stop losses like it should. Like I'll round out the stops that I'll put on my own positions when I trade my own stuff to the closest dollar or the closest 10 cents or whatever, just so I don't have to try to get exactly 4%, right? But this gets exactly there way faster than I ever could. So I really appreciate the desk for that. But so let's talk about the position it does hold. It's holding ticker KIE, which is an S&P insurance ETF, right? It's been holding it about 10 days now, sitting at a 4.54% unrealized profit. The stops were ratcheted for that position up to $61.74, but the target exit is 65, so we're almost there. That's the 8% profit mark that it mandatorily takes. We're about 3.5% from that target, but heads up, the system has flagged it for 10 days off, so it needs a rotation review. I don't like the agents to hold positions too long. I'm following momentum, and momentum tends to fade over time. So it's the second consecutive day that it's come up for review. So Monday, the desk is actually going to rescore it against its 67% mark. Against the rest of the universe that it looks in. And it could get rotated out for something that shows better possibility of movement to them. But we're going to figure that out Monday, and I'll cover it next week. Now, the second brand new position for this week is something I've never heard of, but it's Phillips 66 or ticker PSX, which is also energy sector. It entered it on Thursday at a price of around 189.57. That's our direct play on refining slash downstream side of the whole oil story. So so we just talked about that obviously, and they picked it up themselves. Like I'm not telling these agents to do anything; they follow the money. So the target for that position is 204.74, but it's actually down just a little bit, but still up above the cloud from what I can tell. Now, there are a couple of sleeves in this portfolio. So sleeve one, I programmed in basically fate client input, right? Just so I can see if it works on a bigger scale. So it's got nav, right? So the nav is 1.0, so it's up about 0.86% since it opened its books a few weeks after I started the portfolio. Oh, let me get to Quantum Queso Dip's question real fast before I move on. So Quantum Queso Dip asks, does the agentic trading use margin? No, it doesn't. It has a separate portfolio that is cash. Now, I don't know if you can, let's say, transfer margin from one margin account to the agentic account. I know it's possible to transfer margin, but I haven't actually looked. I'm forcing these agents not to trade on margin because I'm trying to build something for everybody. People like my mom, people like my friends who don't do any trading. something that they can kind of just turn on and go and make a little bit of a side hustle without having to sell jewelry with 50 other jewelry vendors at the supermarket or the crafts fair or whatever. But yes, right now it doesn't trade on margin, but I think you might be able to transfer your margin over to the agentic account, but don't quote me on that. I would say you might have to just double check on that. I will double check and I will get back to you. But personally, I'm probably not going to put it on margin just because that's just not safe, even for an agentic trader. Um, Now, the story for the week, as far as the agents go, I want to give you kind of as much of an honest one as I can. I'm not trying to puffery or pageantry, no performativeness, as my wife likes to use. It's a fun new word. When you see someone acting a little bit, well, like they're on stage, performative is the term that you should use. But our research desk flagged that HDV entry from earlier in the week, the one that lost about 2.4%, has as having gone below the 67% conviction score floor. So because it has a 67% conviction score floor, the system entered it at 64%. For some reason, it blew through my ask on the floor, so I had to reprogram that because that's why we have systems. I'm not trying to have it just make a random decision like this, right? So I wanted to stick to that 67%. So I didn't care about the loss. I was more mad that it ignored my system. So be aware that sometimes your agents do that. So the real process was a bit of a violation, and I want you to hear me say that here on air, because that's the whole point of showing you and talking to you about this desk is some transparency. But the good news is the system caught it on its own and flagged it in the logs before I even had to ask. So it knew, but I was still mad that it pulled that trigger on that position anyway. But here's an even bigger flag. Our weekly research review ran the performance numbers today, and our all-time win rate sits at only about 38%, which is far below our 62% target win rate. And because of that, some recalibrations had to happen. And over this weekend, I'm going to go through just a couple of tweaks. Now, the win rate was lower the first few weeks because I was doing a lot of tweaking. But the last week, like this week, was a lot of motion. So I know that the desk can do this. So I just need to give it incentive to do what was working and, well, have it ignore the things that weren't working and don't do those again. But now the desk is policing itself, right? So it knows this, it updates itself, it teaches itself things. Each agent has their own, well, task, right? And because of that, this team of fake people or agentic traders kind of communicate in their own system. They work like an office. They are a team, right? And because of that, it's functioning pretty well. They're going to keep policing themselves. But I want to talk about the system that catches its own mistakes, and that's not the one that pretends to it doesn't make any, right? Because this is real money here. We don't want to be playing maybe this works, right? I want it to work, and I want to know why it doesn't work, if it doesn't work, because it's important not only to my income but to the people who read my article, who want this to work for them. Now, agentic trading portfolio is open to all Robinhood Gold subscribers, so it's $5 a month, and then $20 a month for Claude. So if you can clear $25 a month with your agentic trading portfolio, you've got your Claude paid for, and that's pretty cool. So at least that's a small step you can take towards agentic trading, is have it make a small profit. That's the salary that I designed into my agentic desk. Because why not? It's all arbitrary, but the more the story works, right? Storytelling is important to AI. A lot of people will build things from the technology side, right? The coding, the I want it to do this side. But I don't necessarily understand all that. I like people. I understand people a lot more than I do code. So for me, when I designed my agentic trading system, I had to base it on well, well, human personalities, human tendencies, human arguing, right? I need them to talk to one another. I need them to communicate, and I need them to do it without emotion. And that's the best thing that an automated agentic trading desk can do for you. But for next week, what we're going to be watching is PSX. We're going to watch because we just got into that Phillips 66. We're looking for that 204 target. Um, that's a name directly tied to the oil story, Hormuz situation, right? We obviously have not gotten out of it completely, which is just disheartening that I still have to keep saying Strait of Hormuz. But whatever. So any escalation there could move it fast in either direction. So luckily enough, it automatically puts stops in before it confirms that the position is live. And if it can't put a stop in on that position, it will sell it right there on the spot, right? It doesn't hold a position without a stop. That is a non-starter for this system because that's important. The agents can't catch a gap down in the middle of the day unless it's running every minute of the day, right? So you want it to be able to have, let's say, Robinhood, the brokerage with an automatic stop system, catch it without you having to basically token max your Claude to just watch that one position might need to be closed, right? At the end of each day, an agent goes in and double checks. Does a stop need to be ratcheted up to keep profits? Does it need it to be closed? Things like that. But you don't need your agents to be running all day, so having a stop automatically put in. Now, a side note for the agentic trading portfolios, for it to automatically put a stop in for you, it needs to have purchased a full share of that position. So keep that in mind when you're programming your agents, that you have it buy full shares. All right. Now, that agent portfolio is live. If you have any questions outside of this chat, please hit me up on X. If you're seeing me from the Facebook end, hit me up on Facebook. I want to help you get through these these initial problems trying something new. And this is something that should be taken seriously because this is something brand new that you are allowing to trade your money. Now, it's smart, but it hallucinates and it sometimes breaks rules, so you have to keep that in mind. Now, let's get into what I think for next week. And honestly, I'm never not bullish. Pragmatic sometimes, but never not bullish. And next week's outlook is bullish. Let's talk about some of the opportunities that we're going to be seeing. But before we get into that, I'm going to take a quick drink. Feeling like a bit of a stand-up comedian with all the water breaks I got to take out here. Now, if you watch a lot of stand up like I do, I'm just grateful I'm not sweating like a pig like some of them, because some of their jokes are not funny enough for me to ignore how sweaty some of those comedians are. But let's get back to the markets. Energy specifically, the refiners and downstream names like PSX being on our own, right? We have a live example of that. If the Strait of Hormuz situation stays tense without fully boiling over, refiners benefit from elevated crack spreads without necessarily eating the full risk premium, the way the upstream producers usually do. So that's worth watching. The AI chip complex on any further weakness, I don't know, maybe. This week's provided the dip buyers, like a lot of us are, a good opportunity. Thursday and Friday's recovery after Tuesday's, tank tells you real money still believes in the trade in the trade medium to short term. If we get another Samsung style scare next week, that's historically been a better buying opportunity than a reason to run, right? Buy the dip here, right? We have to remember, like I said earlier, what this money is for. And it's not for next Friday. It's for 1,000 Fridays from now, for a Friday that you'll never see, right? That's the Friday we're looking for, right? We are legacy investors. Yeah, we trade short term, right? But we use that profit to leverage up into long-term positions and plant seeds that will never see the trees of, right? This is at the end of the day for my family and my son, and I want him to have an abundant life and not have the struggles of poverty. There's no honor in poverty. Like, I don't know who has to tell you that. It's going to be me. There's no honor in poverty. If you can get a leg up financially, do it. If you can be disciplined and make yourself a little bit of money, do it. There are going to be bad days, and those bad days are always just a tiny bit better when you have capital behind you to fix some of those problems. But let's keep an eye on SK Hynix and the broader memory chip space, because that IPO was crazy, like up 14% on debut. That's a lot of capital raise, and that tells you institutional demand for AI infrastructure exposure is still very much alive, even in a week that started with good and then panic. So if you guys are still in the chat, especially you, Quantum Queso, thank you for hanging out with me as always. What's on your radar for next week? Drop your ticker in the chat. I'll pull up something if you'd like, right? If you're here in the chat still, yeah, we can talk about something that you've got. But as we kind of work our way down, relax for the rest of the evening, it is currently 9 p.m. Hawaii Central Time, so this is a late hour. So if you're with me, no matter where you are in the world, thank you so much for joining me. Mahalo nui loa for supporting the journey that I've been on here with you. Now, I had a very interesting conversation with someone important today about some of these agentic strategies and portfolio. I'm getting noticed there on X, and people are asking me questions. So I'll keep you guys updated on the level of excitement that I'm feeling because of that conversation I had today. But let's get into what this week really was, right? So look, that's the week that was. A Dow record on Monday, a $1 trillion chip scare on Tuesday, a Fed that's fighting itself 8 to 9, a jobs number that's weaker than the headline, oil getting jumpy over Hormuz again, and our own desk posting a green week while catching its own mistakes in real time. Personally, I'm elated. But that's the markets, right? That's why we do this show every Friday. That's why you trade, because the headline never tells you the whole story. You're a detective, right? Every trader is. They see a number, they think, is that high? Is that low? If it's not where I want it to be, and I think I can make some income there, I go and investigate, right? So we're detectives. So go detect. If you've got value out of this today, do me a favor. Maybe share it with somebody. Somebody always needs to hear this. Hit follow if you're not already following or subscribing, and drop a comment like my friend Quantum Queso did with your biggest takeaway from the week. I read every single one of these comments and I get back to them, even the hate, because honestly, my life's way too good to care. My agents are trading, numbers are transparent as always, and wins and mistakes both. And I'm going to keep sharing that with you so that you guys get excited about AI agentic technology. And I want to keep this out here for you guys to see every week. But since that seems to be the end of our chat and the end of our podcast, until next Friday, as always, farewell. Ahui ho. Please stay safe, especially because there's a wildfire down the road right now. Keep your mental health in mind, as Drew Carey says. Trade smart, stack wisely, and please take care of your family. I'm Colin Edsman, the host of The Week That Was, the author of the book, Not Financial Advice. I love you. Aloha. I'll see you out there in the markets.